Immediately after the Federal Reserve wraps up its meeting this week, all eyes are likely to gravitate to one small piece of wording that could unlock the future of monetary policy. In its post-meeting statement, the central bank is expected to give an important hint about interest rate moves to come by removing a clause from previous statements that reads, "In determining the extent of any additional policy firming that may be appropriate to return inflation to 2% over time," followed by an outlining of conditions it assesses. For the past year plus, the wording has underlined the Fed's willingness to keep raising interest rates until it reaches its inflation goal. Remove that clause and it opens the door to potential rate cuts ahead. Keep it and policymakers will be sending a signal that they're not sure what's to come. The difference will mean a lot to financial markets. Amending the wording could amount to a meaningful overhaul of the Federal Open Market Committee's post-meeting statement and its direction, according to Deutsche Bank economists. We heard at the December meeting that no official expected to raise rates further as a baseline outcome. And we've heard that Fed officials are beginning the discussions around rate cuts, Matthew Luzzetti, Deutsche Bank's chief U.S. economist, said in an interview. So getting rid of that explicit tightening bias is kind of a precondition to more actively thinking about when they might cut rates, and to leaving the door open for a March rate cut. While the market has accepted for months that the Fed is likely done raising rates, the most burning question is when it will start cutting. The Fed last hiked in July 2023. Since then, inflation numbers have drifted lower and are, by one measure, less than a percentage point away from the central bank's 2% 12-month target. Just a few weeks ago, futures markets were convinced the Fed would start in March, assigning a nearly 90% probability to such a move, according to the CME Group's FedWatch gauge. Now, there's considerably more uncertainty as multiple statements from Fed officials point to a more cautious approach about declaring victory over inflation. Chairman Jerome Powell will have a thin line to walk during his post-meeting news conference. They're going to get a lot of data between the January and March meetings, particularly as it relates to inflation, Luzzetti said. How those data come in will be critical to determining the outcomes of future meetings. He'll leave it open, but will not try to open it any more than what the market already has. For this meeting, it will be harder to decipher where the full FOMC is heading, as it will not include the quarterly dot plot of individual members' projections. However, most of the public statements that officials have delivered in recent days point away from a hurry to cut. At the same time, policymakers have expressed concern about over-tightening.